Hi, it's Mitch here from Reverse Mortgage Pros, and today I'm going to go over reverse mortgages, what's in the small print. So let's get started. Okay, if you're new to my videos and new to my channel, I provide free professional help with your reverse mortgage decision. To make sure you don't miss out on any videos or any material on reverse mortgages, to help you along the way, hit the subscribe button below this video and also hit the like button. That will help you get more videos like this on reverse mortgages. Now, today I'm going to go through some of the small print items of reverse mortgages that are worth discussing. And the most common ones I get asked about are maintaining your property, home insurance, paying property taxes, and the usage of the home. So like what you're allowed to use a home for, renting, for personal use, all that kind of stuff. I'm not going to look at things around penalties, costs and fees, and interest rates. These are probably more large print items and stuff that I've already covered in more detail in other videos. So I'm not going to touch on kind of dollar stuff like penalties, fees, rates, more contractual stuff that's in the small print in this video. Before I get started, as I like to do at the start of every video, I'm going to explain what a reverse mortgage is in 20 seconds. It's a mortgage for homeowners 55 and over that doesn't require any monthly payments. You can get 10 to 55% of the home value depending on the age, property type, and location. You can take as much money as you qualify for, but any existing mortgage must be paid off first. And it's designed to help you tap into your home equity for retirement and to continue to live in your home for the rest of your life. So in this video, I'm going to walk you through what's in the small print when it comes to reverse mortgages. So before I get into details, there are kind of two categories as to how I'd like you to think about the small print in a reverse mortgage. So the first are things that you should do that the lender will likely be able to enforce. So things that probably you want to do because the lender could call back the loan if you don't. And the second are things that the lender wants to encourage you to do, but are probably not enforceable either practically or legally. And I want to talk about that in a little bit more detail, what I mean by unenforceable contract clauses. So you can include anything you like in a contract. That doesn't mean that it's enforceable or that the courts would uphold it or that it's legal. And there are two reasons why something might be unenforceable. So it's the practical reason. It's practically impossible to monitor and prove that you breached that contract term. And then there's the legal reason. So even if you can prove that you breached the contract term, would a court uphold it and consider it legal? And assuming you could even enforce it and improve it. And the best way to kind of walk you through what I mean by this, or I'm going to use a made up example around pizzas. So let's say there's a mortgage company out there, a mortgage company owner, and they really don't like pizzas. In fact, they hate pizzas. So they put the following clause in the small print of all their mortgage contracts. And the clause says, while you have a mortgage from our company on your home, you're not allowed to make or eat pizza in your home. So this is a good example of something where you can put any contract clause you want that doesn't make it legal or enforceable practically or legally. So this is something I would consider an unenforceable contract clause. So why is it unenforceable? Well, first of all, it's very hard to practically monitor. You'd have to have teams of pizza inspectors going around and expecting people to see if they're making pizza or eating pizza in their homes. You'd have to let them into your home to inspect this, which you're legally able to refuse and not let them do, and they wouldn't have any recourse there. And even if they could prove that you made or eat pizza in your home, they'd have to take this to court and have a court rule that they're allowed to foreclose on your home or go through power of sale based on this contract clause. And it's incredibly unlikely that a court would uphold this contract clause and consider it a legal method of them being able to take back your home or foreclose on your home. And specifically in Canada, you're entitled to the right of the individual. In the Constitution in Canada, it states that the right of individual has entitlement to use and enjoyment of their property. And so we obviously have property rights laws in Canada, and there's certain things that you can put in a contract, but that doesn't necessarily make them legally enforceable. So this is what I mean when I say practically and legally, some contractual things aren't enforceable before I get into the detail. So let's go through the small print items, and I'm going to just walk you through which I believe are possibly enforceable and which are likely unenforceable. Now, before I get into this detail, I should remind you that I am not a lawyer, and this is not legal advice in this video. One of the key things with a reverse mortgage is you're required to get legal advice. by law before you sign a reverse mortgage. Everything I'm talking about here is based on my experience in mortgages and what I've seen or not seen. It's a good idea to just take a note of everything in this video, and you can discuss it with your lawyer when you go to get legal advice from them and see if they concur with what I'm saying or not. So let's start with an easy one, which is property tax payments. It's included in some of the lender documents so you keep your property tax up to date, which does include being able to use the deferred programs in some provinces. You don't need to worry about those. I have a video on that if you're interested. This is a fairly simple one. If you don't keep your property tax in good order, you will risk losing your home. That's it, period, end of line. There's no gray area here. This has nothing to do with a reverse mortgage. In fact, if you don't pay your property taxes, you'll risk losing your home. If you have no mortgages, 100 mortgages, 1,000 mortgages, a reverse mortgage, a private mortgage, it doesn't matter what you've got on your home when it comes to a mortgage. If you don't pay your property taxes, you will risk losing your home. Simple as that. So there's no gray area here. This is a very straightforward one. The next is home insurance. So before you take out a reverse mortgage, you'll be required to provide proof of home insurance. And this is something that pretty much every lender of every mortgage in Canada, traditional mortgage, private mortgage, reverse mortgage, doesn't matter. They require home insurance because remember, they're lending using your home as collateral. So they want that collateral to be insured in case something happened to it. If you don't provide proof of insurance home upfront, they simply just won't lend you the money. It's up to them who they lend their money to, and if they want you to provide insurance before they lend you that money, they're perfectly legally entitled to do that. Like I said, every mortgage pretty much across of Canada has this clause. So here's a question though, after you have the money, could you then just cancel the insurance? Are you required to keep the home insurance up to date and keep it through the life of the reverse mortgage? Well, it'll be very hard for a lender to find out if you cancelled and didn't maintain the home insurance. If they did find out, would a court uphold it as a reason for them to be able to foreclose on your home? I don't know. I don't think it's actually been tested in court. But what would likely happen is that first the lender would have to give you an opportunity to fix the issue by buying home insurance. And most people, when faced of the option of being taken to court and potentially having their home foreclosed on or spending a few $100 on home insurance, just choose to buy the policy if it ever gets to that situation. The cost of the home insurance is going to be much less expensive than the cost of the legal case to fight a lender on this one, should it ever come to that. And it's also worth noting that there's kind of a two-prong risk here if you decide not to keep your home insurance up to date. So the first is that if something happens to your home and you don't have home insurance, you still have to pay that mortgage. So all the money that you owe to the lender doesn't go away. You have to pay that money back to the lender. And now there's the second piece of the puzzle in that you now have to pay the cost to rebuild your home as well. So let's say your home floods, there's a ton of damage, $300,000 worth of damage, and the lender decides to recall your entire mortgage. You've now got to pay the $300,000 damage because you didn't have home insurance, and also then repay the full mortgage. And what will happen is any other assets, anything you own, will have to be used to repay that, and you could go down the line of having to declare bankruptcy. It's not a good idea. So my recommendation is you keep your home insurance up to date and just consider that a small cost of the value of the investment of your home and what you gain from owning a home in Canada. Now, here's a common one I get asked about a lot, and it's property maintenance. So almost all the lenders include some kind of clause that requires you maintain the property. In my view, this is similar to the kind of made-up pizza clause I talked about, and I don't believe that this is enforceable. And there's two reasons for that. The first is that it's practically impossible to prove. Again, they'd have to have teams of property inspectors, and you'd have to let them into your home to inspect it as well. And none of the lenders, as I know, as I'm aware of, actually have this. Then there's the concept of what is maintaining a property. One person's definition might be different from another. And then just like the made up pizza clause I walked you through, if they could prove and come to some kind of somehow get into your home, inspect it, and decide that you hadn't kept your home up to date, they would then have to get a court uphold this as a reason to foreclose on your mortgage. And as far as I know, that hasn't happened in Canada, and I don't know if it's ever been tested in the legal system. And again, just like the home insurance, what would probably happen is you would get an opportunity to get the home up to scratch before it even got this far. Having said all that, though, I highly recommend that you keep up the maintenance on your property anyway. The best way to think about this is it has a high return on your investment in maintaining the value of your home. Your home is one of the largest assets that you own. The small amount of time and money it costs to maintain it will be positively returned to you in the long run. What we mean by that is if you spend $1,000 a year maintaining your home, that home just by doing that maintenance is probably going to go up in value, $5, 10, $50,000 a year. So the dollars that you're spending aren't wasted dollars. It might seem like it, but it's actually positive ROI on what you're doing. And at the end of the day, you are still your homeowner, even with a reverse mortgage or any other mortgage. It's your money on the line too. It's your asset that you own. It's your investments. And here's a good rule of thumb I tell people is to budget for 0.5% of the value of your home in annual maintenance costs. And that can include insurance too, of course, and things like gutter cleaning, waterproofing, furnace servicing. Around about 0.5% is a pretty good budget for your home insurance and everything to keep this expensive and valuable asset up to date so that you can reap the benefits of it. The next item in the small print reverse mortgages is the usage of the home. So almost all the lenders are fine with you renting out a portion of the home, and you don't need to report this, for example, if you rent your basement out. Most of the lenders are okay with that and don't require you to report it or do anything. Where there would be an issue is if the home is no longer your principal residence. This is something that you should report that could cause an issue because technically reverse mortgages are only lent to principal residencies, and this would cause the reverse mortgage to potentially become repayable when this happens. And actually, this is the same as with all mortgages across Canada. All lenders, when they lend money, they either lend to a principal residence or an investment property, and the mortgage contracts and the mortgage details differ. So for a pretty simple example is if you go to a bank, they will give you a lower interest rate on your principal residence than they will on an investment property because investment properties are seen as higher risk. So if you then change that from a principal residence to investment property, they would want to increase the rate because they believe that their risk is increased. Now, a couple of things on this. You technically don't need to live in the home permanently every single day of the year for it to be designated principal residence. For example, you can have a cottage that's designated as your principal residence. There's the concept of the snowbirds who like to spend part of the year in warmer climates and part of the year back in Canada. That's all completely acceptable. Where it would be an issue is if you clearly were renting it out and weren't even living in it and living somewhere else. Now, there's also Airbnb in this category, and this is a little bit more of an issue and a tricky one. Lenders do not like Airbnb. None of the reverse mortgage lenders, in fact, most lenders for any mortgage don't like Airbnb, and none of the reverse mortgage lenders are happy lending to homes that are listed on Airbnb at the time you apply. And because their listings are public, it's easier for lenders to find out if you're using it. So this is something that when it comes to, remember I talked about the practical and legal aspect of something being enforceable. This practically is quite easy to monitor if you're listed on Airbnb because you can just go on the website and look for your house. However, this hasn't been tested in court that I know of, so there's a chance the court would still side with you and consider Airbnb as your free right to use your property. This is a good one to discuss with your lawyer when you do talk to them. If you're planning on using Airbnb, I would definitely get legal advice. And see what your lawyer thinks about that. If you're on the fence and you're not sure what to do and it is an option, I would side towards not using Airbnb because I know that the lenders don't like it. So those are the key kind of small print that's found in a reverse mortgage contract. Here's how I would categorize these items. So likely enforceable, so stuff that you probably should do because it might end up being an issue and costing you your home is maintaining home insurance, making sure it's your principal residence, not renting it out to somebody else completely and you're living somewhere else, and paying your property tax, keeping up to date. That's an absolute no-brainer. And ones that are likely unenforceable and are largely included in the reverse mortgage contracts because they want to encourage you to do it are maintaining the home and then other partial usages of the home. So renting your basement out is something that's largely accepted for a principal residence for a mortgage in Canada. So in summary, the key small print items to ensure you cover off are the three I mentioned: home insurance, property tax, and maintaining it as your principal residence. When it comes to actual maintenance of the home and rules around how you use the home, these are unlikely to be enforced and largely are included to discourage or encourage that kind of behavior. So discourage you from renting it out and encourage you to maintain the home. When you get your required legal advice before taking out a reverse mortgage, make sure and discuss these with your lawyer. And if you are planning on renting a portion of your home, all of your home using Airbnb, I highly encourage that you talk to a lawyer about it and ask your lawyer what they think in terms of the reverse mortgage contract and if that's something that could be used against you or lead to an issue with the reverse mortgage down the line. Um, I, I would also suggest talking to a lawyer about all these things, of course, when you have that meeting. There isn't much to talk about at those meetings because reverse mortgage contracts are fairly standard. So these are really good questions to bring along with you since you're paying for that meeting ultimately at the end of the day. So if you're interested in a reverse mortgage, you can get a free professional reverse mortgage assessment in 90 seconds. I'll give you a free assessment, advise you if this is a good solution for you or something better works. All it takes is 90 seconds at the link below the video, or you can go to reversemortgagepros.ca/assessment. That's reversemortgagepros.ca/assessment. If you've got any questions or comments, leave them in the comment section below and I'll try and answer all of them as usual. Otherwise, I hope you enjoyed this video and it helped you understand and get more comfortable around the small print that's included in reverse mortgages.